Guys, stop wasting your time. Stop wasting your money. Stop wasting your resources. You're not going to make money in Forex with the way you are going. You are not going to make any money with the way you are going. The market doesn't care about your life, doesn't care about your personal problems, doesn't care about your capital, nothing. You're not going to make money like this. There's a way to go, and in this video we're going to be showing you 4 reasons you're not going to make any money in the Forex market. Guys, do you really think professional traders make millions of dollars from all their trades? No, they don't. They don't make millions of dollars from all their trades. They don't make a huge ton of money every time on every single trade they take. It's not like that. Statistics have it that most successful traders are successful 50% of the time and they lose 50% of the time. This is a fact, guys. This is a fact. So if they lose 50% of the time and they are winning 50% of the time as well, how are they still profitable? How are they still making money? There's something you need to know. There's something you need to know, guys. Now, firstly, the first reason why you won't make money in the Forex market is because you don't even know what Forex is. You don't know what you are doing at all. You were deceived. You saw flashy cars and luxurious houses and the flashy life and things like that. Those are the things that brought you into the game. Yeah, those were the things that brought you into the game. So you came into Forex thinking you were going to make $1 million the next day. You are going to put $100 and then make $50,000 the next day. Nah. Instead, you're going to even lose your $100. You're going to lose the tiny capital you came into trade with, even if it's a big capital. Now, firstly, Forex, you have to understand, guys. You have to understand, guys, that Forex is an investment vehicle. It has to stick into your head. It's an investment vehicle. It's a slow and steady process. It's not a get rich quick scheme. You're not going to get rich overnight, especially when you're trading small capital. You're not going to get rich overnight in Forex. It's an investment vehicle. It has to go a step at a time, gradually, consistently. So you have to change that mindset. There's a problem with the mindset that Forex will make me rich quick. You have to change it and understand that Forex is an investment vehicle. You're supposed to treat Forex as a business. You don't come into the business space and then maybe you produce some sort of product and then you push it into the market and then the market buys your product and you make crazy amount of cash. It doesn't work like that. It doesn't just work like that. You're gonna have to go through a process. You're gonna have to take your time. You're gonna have to be consistent. Okay, you're going to be patient. So Forex is an investment vehicle and is not required. You should not be seen as a get rich quick scheme. Whoever told you that, wherever you saw that, it's a lie. Forex is not a get rich quick scheme. It's an investment vehicle. Now, what this means is you're going to grow your capital gradually. It's going to go from $100 to $102. It's going to go from $102 to $110, and then it's going to come back to $105, and then it's going to go back to $120, just like that. An average profitable trader's equity curve it has ups and downs. it's not just a linear graph. It doesn't just go in one line upwards. No, no. It has up start losing days. There's something called drawdown, where you're losing. You have series of losing trades, 5 losing trades in a row. You take the 6th one, you still lose. Take the 10th one, you still lose. That's the reality, because the market doesn't care about your life, right? So we need to correct that mindset. It's an investment vehicle. See it as an investment vehicle where you can put the capital you're willing to lose. Firstly, use the capital you're willing to lose to generate wealth for yourself, to build wealth for yourself. You don't build in a day, you don't build in a night. You build over a period of time. So you're growing gradually, and you're making, you're compounding your profits, so to speak. You could compound your profits, and it keeps growing gradually. All right. Now, the second reason you're not going to make any money in the forex market is because of a strategy. You don't have a strategy. To make money in the forex market, you're going to need a strategy. Imagine you're in the military and you're going for war and you don't have a plan. You don't have a combat plan. There is no plan. You just go into the war front or the war ground and you start shooting, and you're dead. In fact, it's going to be a mess. Before you know it, you're dead already. So you've got to have a plan, a precise plan. Now, a trading strategy consists of a couple of things. One, what are you looking at? What do you want the market to do? Do you want the market to move in this direction, or do you want the market to move in that direction? What exactly do you want the market to do? What are you looking at for the market to do? What are you waiting for? Now, when that which you are waiting for or looking out for happens, how do you react? What do you do? What's your response? Do you go into the trade? Do you wait for 2 days? Do you wait for 5 days? What exactly are you going to do when what you want is before you, as a code on the chart? How do you respond? Now, after you've gotten that figured out, the next thing you want to pay attention to is, where do you go out of the trade? Now, you go out of the trade 2 ways, either with a stop loss or with a take profit. In other words, your stop loss is going to be triggered when you've accumulated a certain amount of loss and that you're not willing to accumulate anymore, right? And then take profit is the opposite. You've accumulated a certain amount of profit and you don't look forward to accumulating more, right? So you could have a particular point, you could have a level or a price on the chart where you're looking to take your profit at. Once, if it's a buy, for instance, once the price gets up to this point, I'm going to click the buy. Once it gets up to this point, I'm going to take my profit rather. Once it comes down to this point, I'm going to close my trade for a loss. You need to have that figured out before you even go into the trade, because if you go into the trade and you don't have that figured out, your emotion is going to take the better part of you. Emotions will play in. You'll be taking emotional decisions, and that's the last thing you want to be doing on the chart. So you have that figured out. Your stop loss and your take profit must be figured out before you got into the trade. This consists of your trading strategy. It has to be written down in your trading journal. So you have to have those 3 things already in place to form a strategy. You have to have those 3 things already in place. Now, to form a strategy, you're not just going to wake up and be like, okay, when I see a bullish engulfing, I'll buy, and when I see a bearish engulfing candle, I'm going to buy. No, 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 no. Once you've come up with that strategy, you are expected to back test it over a period of time, preferably over the past 100 trades. You should back test it. It's very important. You have to back test it. Now, one of the things back testing will do for you is it's going to give you more confidence in your strategy. If the strategy is good enough, it's going to give you more confidence. It's going to give you more detail as to what you will do at certain situations, at certain times. Sometimes the market might not just concur to what your expectation is. It's going to be a little bit close or far off. So at those points, what do you do? Right? And then your backtest is going to show you what to expect, how your strategy performed 100 trades ago. So if you had taken these 100 trades, would you have been in profit or would you have been in loss? How did your strategy perform the past 1 year, the past 2 years? As a matter of fact, guys, this is where the pain of forex trading is supposed to be, not in the losing trades. But this is all mixed up in the industry. The pain for forex trading is supposed to be in the back test. When you're back testing your strategy, that's where the pain should be. Once you've successfully back tested the strategy and you've concluded the strategy is good for me, all you need to do is just keep staying consistent. You already know what to expect. You just have to keep staying consistent. You're not worried. Even if you have series of losses, you're not worried as per. Even if you have a series of losses, you're not worried because you know you've already seen this in your back test. You know your strategy failed 7 times, it lost 8 times. After the 8th time, it came back up in profit gradually, right? It lost 5 times. You already have this information at the tip of your finger. So you're not confused as to whether your strategy is still working or it has stopped working, what's wrong. You don't have that confusion. Now, the third thing, once you have your strategy figured out, the third thing you're going to have to pay attention to, if you don't pay attention to this third thing, you're going to still lose money. This third thing is you have to stay with your strategy. You have to stick to your strategy. Once you've backtested a strategy, you've developed a strategy, you've written down your strategy, you've started trading with your strategy, you have to backtest your strategy. You must have to backtest your strategy. You must have to backtest your strategy. Don't stop. You don't move from strategy to strategy, strategy to strategy. It's a waste of time. Stick to one strategy. The reason you'll be losing money on your strategy is not because the strategy is bad. If you've back tested it, if you did a back test of your strategy and it was successful, it was profitable, you're comfortable with the win rate because your strategy has to align with your personality. Your strategy has to work with your personality. You won't be someone who can't risk much and you have a strategy that's losing 80% of the time, has a win rate of 20 but is still profitable, has a win rate of 20 and is still profitable. By the time you have 80% of your trades in loss, you might not be able to stand the emotion. But if you're someone who can handle that, that's fine. You can work with that kind of strategy. But if you cannot handle that kind of emotional imbalance, you have to come up with a strategy, have a strategy or work with a strategy that wins at least 50% of the time or 60% of the time. Now, once you've come up with such a strategy, you have to stick with the strategy. Stick with the strategy, whatever happens, stick with the strategy. The reason you'll be losing money off of a strategy is not because of the strategy, it's because of the fourth reason why you won't make money in the forex market, which is your risk. Your risk, after you've backtested your strategy, you're sticking to your strategy. The only reason you will lose money in the long run with that strategy that proved profitable during the backtest is because of your bad risk management. That's the fourth reason you're losing money. Your risk management is horrible. Horrible. It's really horrible. Really, really horrible. Let me show you something about your risk management. How your risk affects your trade. Now this is a platform where we used to backtest our strategy, the results of our strategy. Shout out to Trading Rush. Now they provided this application to be used. You could use it to calculate your win rate after your backtest. Now let's say, okay, let me refresh this. Is refreshed. Now let's say for every time you make profits, now you're going to see, firstly we'll show you how consistency in your risk management helps you, and we'll also show you how what inconsistency does to your risk management. Now let's say every time you win, you're risking a certain percentage, let's say 3%, and that 3% is $200, right? That's what you're making, right? When you win, you make $200, and when you lose, you should be losing $50, right? So let's say out of 20 trades, right, we are going to lose, okay, let's just make this 100. So out of 100 trades, you're going to lose 70 of them. 70 of those trades will be losses, and 30 of them will hit your take profit. Let's start with the 30. 1, 2, 3, 4, 5, 6. Up to 30. Bam. Good. Now let's see. Let's get rid of this. So we are going to be watching this area as well. So as you can see now, 30 trades won. Starting balance was 0. Current balance now, we're in $6,000 profit, current profit, right? Now let's add 70 losses and see how that works. As you see how the win rate is reducing drastically. Now our win rate is 31%. We're almost there, 30%. Now 70 losses have been recorded, 100 trades in total, 70 losses recorded. We won only 30 of these trades, right? 30 wins, 70 losses. Win rate is what? 30%. But see the beautiful thing. See how beautiful this is. Current balance now is 2,500. So even when we've lost more than we made, by almost triple, like our losses almost tripled our wins, we are still in profit. As you can see, we're still in $2,500 profit. Do you get it, guys? Even when the win rate is very low, because the risk is consistent. Now we're going to use this same illustration and show you how, in fact, we're going to reverse it. We're going to have 70 wins and 30 losses, and I'll show you how inconsistency could mess your whole results up. Now let's reset this. Okay, so let's say you're supposed to be winning 100, right? And how many did we say? 70 wins. Okay, let's go. 70. Quick. 70 wins. Cool. Now let's see how inconsistent we can be on our 30 losses. So let's say first loss you lost 50, next one you lost 500, right? Next one you lost say 380, next one you lost 600, and then you lost 60, and then let's keep going, and then you take a silly trade and then you lose 1000, and then let's say you now lose 50 and 50 again, and then you lose 658, right? You do that a couple of times, and then you now lose another 1000 again. Let's say 1009. You do that 2 times, and then we go 850, and then we do 50 again. Okay, let's say 550. That's cool. Remember, just 30 times you want to lose, or just 30 times, and then we'll do this is 650, and then let's say 800 quite a couple of times, and then 27, and let's see 1000 just a couple of times again, and then 300, and let's see 50 twice, and then let's see 680 for instance. See, you're already in loss. Get it right? Now let's see 500, and let's do 50, and then let's do 300, and one more time. Now let's do 158. Okay, so win rate is 70%. Very nice, right? Very enticing. That's why you shouldn't fall for all of these guys who are telling you 100% win rate, 99% win rate. That's a joke. That's a huge joke, right? And now you've won 70 trades out of 100, and then you lost 30 out of 100, just 30. But because your risk was very inconsistent, you ended up in a loss of minus $1,490. You get it? So this is just to let you know the reason you're actually losing on your strategy that did well during the back test is because of your horrible risk management. Your risk management is horrible. So you have to pay attention to that. Keep your risk consistent. If you want to, in our previous video, we've shown you how to calculate your risk, particularly on a cent account. We'll show you how to calculate your risk on a normal USD account. Now, if you decide to risk, let's say 3% per trade. If you decide to risk 3% per trade, stick to 3%. Every trade you take, calculate it and make sure it's 3% you're risking. All you need to do is just have your risk to reward to be at least 2:1. Your reward to risk ratio should be 2:1, and you'll be good. Just keep risking 3% consistently. If you do your risk calculation and your account balance can carry the risk, ignore the trade or let the trade come down a little into your stop loss area, and then you now enter. But you have to pay heavy attention to your risk management. Heavy attention to your risk management. Very heavy attention, guys. Otherwise, it's going to thwart all your efforts, your back test, your knowledge, everything. This is the tiny line between a profitable trader and a non-profitable trader. This is just a tiny line between a profitable trader and a non-profitable trader, guys. So don't take your risk management for granted. It's very, very, very important. Very, very important. Now, when you've paid attention to all of these things that I've mentioned, you have a good mindset. Your mindset about Forex is okay. You're looking at it as an investment scheme. You've backtested a strategy, it worked out well on the backtest. You're willing to stick to your strategy, and you've come up with a good risk management structure. All you now have to do is just stay consistent. Guys, I'm telling you, you'll be amazed at how fast your results will be, how fast your growth will be. You'll be amazed, right? You'll be amazed. Just stay consistent on these things. Stick to your strategy and to your risk management structure. You'll be amazed, right, guys? Just those things, you'll be amazed, right? You'll be amazed. I'm telling you, guys. If you have difficulties calculating your risk, check our previous videos. You'll find the video how to calculate your risk properly. Alright, if you have strategy issues,
Hey everyone, we finally found the best VIP Forex signal channel in this industry. SecFX is an exceptional quality Forex signal provider with several years of experience. They give a whooping 25% profit to their subscribers. Forex traders prefer SecFX because they give realistic promises. They have packages for traders in the ranges of $10 to $300, $300 to $1,000, $1,000 to $4,999 and $5,000 above. They guide you to make the best trading decision. From what package suits your budget best to the best risk management plan to protect your capital. Geez, guys, they are the best. They also have plans for those who do not want to trade but just want to invest. Try them out today. Stop blowing your accounts. Step into the world of your dreams. You can contact them via email on secfx@outlook.com or simply comment, "I am ready," and you will be sent the form immediately. See you guys on the other side. SecFX, there's profit for everyone.
From time to time, we'll be posting some of our strategies. You could also watch our previous videos. You'll see how we analyze the chart, how we enter the chart, how we enter a trade, and things like that. It will be very helpful to you. It will be very, very helpful to you guys. Alright, guys. So this video is already 30 minutes long, so we're gonna have to end here for now. We'll do a continuation video shortly. If this video was helpful to you, do well to subscribe, hit the notification bell so you don't miss subsequent videos like this, guys. See you in the next one. Peace out.